We probably are in a recession. The thing is, the official scorekeeper, this is for the United States, not the...
Feeling a little uneasy about the economy lately? You're not alone. Today, we're tapping into the expertise of Jim Rickards to help us navigate these uncertain times. As a prominent American lawyer, investment banker, and author, Rickards has a unique perspective on what's really going on with the recession, tariffs, and the bigger economic picture. Ready to hear what he has to say? Let's dive in. The reality of recession. Rickards begins with a straightforward assertion: we are likely already in a recession. This statement might come as a shock to some, especially in an environment where many are still recovering from the economic impacts of the pandemic. The term recession is often thrown around, but what does it truly mean? In simple terms, a recession is a significant decline in economic activity across the economy, lasting more than a few months. It is typically visible in real GDP, real income, employment, industrial production, and wholesale retail sales. According to Rickards, the official scorekeepers of economic health, such as the National Bureau of Economic Research, often announce recessions long after they have begun. This can leave individuals and businesses unprepared for the economic downturn. He emphasizes the importance of looking at real-time indicators instead of relying solely on these delayed assessments. To substantiate his claim, Rickards points to several key markers. One is the GDP tracker from the Federal Reserve Bank of Atlanta, which has shown a rapid decline in economic growth projections. This decline is alarming and indicative of underlying issues in the economy. Import surges driven by tariff proposals have increased the trade deficit and, in turn, decreased GDP. This, coupled with stagnant hiring practices, suggests that we may already be experiencing the effects of a recession. Indicators of economic downturn. As we explore the indicators of a recession, Rickards highlights the yield curve as a significant forecasting tool. The yield curve represents the relationship between interest rates and the time to maturity of debt for a given borrower. Under normal circumstances, this curve slopes upward, indicating that longer-term debt instruments have higher yields than short-term ones. However, an inverted yield curve, where short-term rates are higher than long-term rates, often signals an impending recession. Rickards notes that the yield curve began to flatten and then invert about a year and a half ago, which is a classic indicator that a recession is on the horizon. The implications of this inversion are profound. It reflects the sentiment of the market, which is made up of institutions with vast resources and information. When these institutions begin to favor long-term securities, it indicates that they anticipate lower growth and possibly a recession in the near future. Tariffs and their economic impact. Another critical aspect of Rickards' discussion revolves around tariffs, particularly those imposed by President Donald Trump. Tariffs are essentially taxes on imports, and their introduction has sparked a significant debate about their effects on the economy. Rickards argues that while tariffs can be detrimental to foreign economies, they are beneficial for the United States. This perspective challenges the common notion that tariffs primarily hurt consumers. Rickards explains that the economic burden of a tariff does not fall solely on the consumer. Instead, it is shared across the supply chain. Importers pay the tariffs initially, and they may negotiate prices down with producers to absorb the cost. This dynamic means that any perceived inflationary impact from tariffs may not be as severe as some argue. The crux of his argument is that tariffs can protect domestic industries and encourage foreign companies to invest in American manufacturing. If you're curious about investing, you might want to check out Interactive Brokers. I found their platform useful, and the link is in the first link of the video description. However, the conversation about tariffs is not without its complexities. Critics argue that forcing manufacturers to relocate to the United States could lead to increased production costs, which would ultimately be passed on to consumers. Rickards counters this by emphasizing that American workers are highly productive. When given the right tools and investment, they can compete effectively with foreign labor even if wages are higher. The global economic landscape. As we consider the global context, Rickards addresses the implications of tariffs on international relations, particularly with China. The relationship between the United States and China is fraught with tension, and the introduction of tariffs can exacerbate these issues. Some fear that increased tariffs could push China into a more aggressive stance, particularly regarding Taiwan. Rickards acknowledges these concerns but maintains that the U.S. must prioritize its own economic interests. He argues that the U.S. should not shy away from protecting its economy, even at the risk of antagonizing other nations. The principle of making America great again should take precedence. And if that means imposing tariffs, then that is a necessary step. Ukraine and geopolitical dynamics. Shifting gears, Rickards delves into the geopolitical ramifications of the current economic climate, particularly in relation to the ongoing conflict in Ukraine. He suggests that the war in Ukraine was not an isolated incident, but rather a culmination of various factors, including U.S. foreign policy decisions. The U.S. has been heavily involved in Ukraine, providing support that some argue has only escalated the conflict. Rickards highlights the historical context, noting that the U.S. has often positioned itself as a global policeman. However, he argues that this role has become increasingly complicated, especially as the U.S. faces its own domestic challenges. The war in Ukraine has revealed weaknesses in U.S. military capabilities and raised questions about its foreign policy strategy. The implications of the war extend beyond military considerations. Rickards argues that the economic fallout from the conflict will also have lasting effects on the U.S. economy. The costs associated with military aid and support are substantial, and they contribute to the already ballooning national debt. The future of the U.S. economy. As we look ahead, Rickards expresses cautious optimism about the potential for economic recovery. He believes that the U.S. economy could bounce back in the coming years, particularly if the right policies are implemented. However, he warns that the hangover from previous economic policies, particularly those associated with the Biden administration, will linger. Rickards emphasizes the importance of fiscal responsibility and the need to rein in government spending. He advocates for a 3-33 plan, which aims to reduce the deficit to 3% of GDP, achieve real growth of 3% or more, and increase oil production by 3 million barrels per day. This multifaceted approach could help stabilize the economy and lay the groundwork for future growth. Jim Rickards provides a comprehensive analysis of the current economic landscape, highlighting the potential for recession, the impact of tariffs, and the geopolitical ramifications of ongoing conflicts. His insights offer a nuanced perspective on the challenges facing the U.S. economy and the steps needed to navigate this complex landscape. As we move forward, it is crucial to remain informed and engaged with these issues to better understand the forces shaping our economic future. For those seeking to delve deeper into these topics, Rickards' work serves as a valuable resource. His expertise in finance and economics provides a roadmap for understanding the intricacies of today's world and the potential path to recovery. And as we continue to grapple with these challenges, it is essential to keep the conversation going and explore innovative solutions that can lead to a more prosperous future. If you're concerned about your financial security and are thinking about investing, check out the first link in the description. It's the platform I use, Interactive Brokers. Learn more. And if you enjoyed this video, please give it a thumbs up and subscribe to our YouTube channel for more great content.